I'm going to talk today about money management, financial management, not of your trading day, which could be another podcast, but of your overall wealth. Before I do that, though, if you want to send me any questions, you can find me on LinkedIn or at JELINBRA on Twitter. Just send me a direct message and anything you want to discuss or talk about, or if anybody wants to come on and do a Q&A too, that would be great. And anything like that helps because it just creates more stuff for me to talk about. Usually I pull stuff from my own experiences and my own reading, so it seems like the content never ends that way, but I do enjoy questions a lot. So for the money management and the net worth stuff, personal worth stuff, it's interesting when you're trading because you don't have a steady paycheck, and emotionally if you struggle, if you've been doing this for a while and you've built up some money, and this may not be relevant to everyone's situation, so I don't know how many people I'm speaking to like this, but this is my situation right now, is you built up money over the years trading, and what do you do with that money? If you're too aggressive with it in the market, then if it takes a big downfall, you're mentally handicapped and you may be losing some confidence and you're rattled, and it affects your trading decisions. So you could go in really low risk investments. But if you do that, you're missing out on these huge market runs of the last 10 years. And a lot of times when the market runs up and you have low volatility, shitty trading markets, so at least you're making money on one side of the market when you're invested in assets. So you can make an argument that a trader should always be invested in assets, because when the market declines, a trader is going to make more money in the volatility and plug the holes in the assets they're losing personally, then fill the buckets back up at the bottom of the market, and then the situation switches and you're riding assets up, and then the trading gets crappier. And that makes a lot of sense. And to some extent that's true, but you really have to know your own personality. So I kind of do a hybrid approach where I do some of that, but I don't do a lot of it. And I'm starting to get out of the market a little bit now on the personal side because we're due for a correction. It might not happen for a year or two, but we're getting near the end of the cycle, I think, at some point. And I don't really care about grabbing the next 10 or 15%. I would rather focus on my trading, which is where I'm going to make by far the most amount of money anyway. The other stuff is just kind of gravy, and not get hurt over there on that side. Because if I get hurt on that side, it messes up my head. It puts me in a bad mood. It makes me feel uneasy, and all those are bad states to be in. So I spent a lot of time really thinking about, option strategies to use to protect the portfolio. I can get into this more in other talks if people are interested, but different things you can do: futures options on index plays, shorting stocks. It's expensive just to buy puts, so there's creative ways to try to do it, which I'm working with a close friend that I trade with to figure out the best way to do that. But it's about not getting hurt, knowing what you can handle. And I think a lot of times, unless you've done this for a while and taken some hits, you don't really know what your risk tolerance is. But once you lose a lot of money, you realize really quickly what kind of person you are and what you can handle. So if you're one that sinks down and really freaks out when things go bad, you cannot allow yourself to have that be on the table. You have to take that off the table. If you're really patient and you're young and you're not worried about that, then it's different. Or maybe this is irrelevant to you because you're just building yourself up and you don't have any money outside of your trading account. So fine. That's the situation I was in for a long time, and I was just going full throttle. But then it changes, and you have to think about everything that weighs on your psyche. And then I don't have kids yet, but that's going to happen. And then when that happens, that's another thing to think about, and how that impacts your investing, impacts your trading. So I think these are questions that there's some good answers, but there's only good answers for you, just like everything else, right? The best plan might not be the best plan for you, but understanding how much risk you can take, and then looking at probabilistically where would the market maybe be in 5 years. I would say sideways to lower. I could be wrong. I don't think I'll be spectacularly wrong if I am. So it means probably take the risk down on that side of things and then just focus on trading.